Welcome back. And now this week is going to be an interesting one. Why? Kevin Walsh, the designated Fed chair, is he going to deliver? We got important news events, CPI data, PMI data from the US and elsewhere, and geopolitical tensions are kind of going through the roof again. Well, do they do really, or will markets basically strengthen again? Stock markets at least. So let's get started. In our report today, we want to check out the economic data first. CPI data out of Canada might be quite interesting this week. Why? Because they were expected to rise. However, the markets have shown otherwise. We got the data today, which was slightly below expectations, and with that, we could see that the market momentum of the Canadian dollar might be worth a consideration. The Canadian dollar has basically kind of lost some steam against other currencies, and that's not the norm, especially not during the recent times, as we can observe for now. The currency pairs, the euro, Canadian dollar, basically started the week on the lower end, potentially falling. However, what was happening in the end was just that the market kept rising again right when the news came out, right? So upside motivation now is the key takeaway as well, if we are looking at this from the market perspective. And the question is going to be whether the recent trend of the Canadian dollar might be able to reverse again, right? Downside momentum kind of currently on track. And that's not only the case in the euro against the Canadian dollar, but also the US dollar against the Canadian dollar, showing similar impact. The times have been basically, or the times are over when the Canadian dollar was also kind of guided by oil markets. And that's now the big developing story. Trump stating Strait of Hormuz open again. Iran said, wait a minute, no, we are not opening the Strait of Hormuz. And this funny meme is circulating. Opening times 9 to 5 p.m. on a daily basis might just be what's the impact in markets, or showing us impact in markets on a broader based scale. Looking at this from the regular perspective, we see that markets indeed, or looking at WTI basically, have been weakening. We see some volatile moves, and indeed the oil market might weaken somehow further. The question is if really the implications will now ease again further, or whether the market is going to rise again further. Looking at this from that perspective, we might say whatever charting patterns I draw in here, we usually in the past had impactful momentum when certain triggered news events from the outside started, and then obviously kind of causing the market volatility to rise, right? Attack of the Ukraine by Russia, prices were rising, subsequently falling back again. We saw certain impactful momentum levels here, but now the question is, will really indeed the market weaken further? And we could also make this equation on a different note, on a different scale, with the US dollar. If strength of the US dollar will come back, oil prices might naturally weaken as well, obviously pulled lower by a stronger greenback. And that's currently potentially the case. Stock markets are next we want to talk about. But if the US dollar remains on a stronger basis, basically if Kevin Walsh doesn't start to cut interest rates, he might be in a bit of a dilemma. Why? Because the inflationary story might kind of start to run away in markets. If inflation grows, technically central banks will counteract by increasing interest rates. Now, Donald Trump stated he had now found his guy for the Federal Reserve. And if Walsh says, look, we're going to not ease rates, but we will approach and kind of adapt the wait and see pattern, meaning that the US dollar might strengthen or might remain on a stronger basis, just because the Federal Reserve is not going to cut interest rates, might obviously kind of cause market momentum to tell us otherwise. In any case, what we can see is that oil keeps weakening somewhat, but it depends as well on the geopolitical tensions and how they are being solved to some extent. Iran is likely going to say, look, if Israel and Lebanon will fight, and if Israel doesn't stop fighting back, we might say, then obviously kind of there might also not be the Strait of Hormuz being opened. And then the entire story is just walking back and forth, or going back and forth in this case. Let's have a look at stock markets, because the S&P 500 started perfectly fine the last week and the week prior. This week we were approaching higher levels again, and what I meant, like we saw the market moving higher last week, not perfectly correct, moved, opened slightly lower, moved higher again. We see the same story. If we continue with the bullish scenario, we can say, look, we are in the S&P 500, well above the 7,000 level, and the market might just be ready to pop here back to upside areas. That might mean talks are going to happen between the US and the Iran. Strait of Hormuz indeed easing. We see easing factors of this in this entire conflict, causing the market momentum to potentially push on further. But what if we see geopolitical tensions kind of escalating again further? Then we might see the exact opposite. We could say as well, this was a nice push to the upside. But what if we get a huge bearish candlestick pattern now, bring the market back to the downside, which indeed, that's the acronym here for this bearish candlestick pattern. If we see it towards the end of the month, well, basically this is what I mean, that how this blue colored candlestick, developing a blue colored candlestick could look at the end of the month here. So we are not over yet in the month of April, and in the next remaining trading days we might see indeed that the market momentum comes lower, turns lower, and hence obviously starts kind of behaving in a negative way. This week on Tuesday, we got the information in this regard. We could see that there's something happening on that side. And let's check out further numbers, further information, which we should take into consideration. We got retail sales from the United States after the claimant count change basically tomorrow. Retail sales would be interesting perfectly. They are expected to rise further, 0.5 to 1.3%. So if they do, this could indeed start giving the US dollar a bit of a lift. Down the road, we have also other important data from the UK, and that's the Purchasing Manager Index we have here. Flash manufacturing PMI from the UK, as well as the services PMI. We get UK's retail sales data as well. All a bit on a mixed note here, and the claimant count change data also. So that brings us to the point we should check out how the pound is doing. And as I said, most currency pairs with involvement of the dollar started the week slightly on a lower note, right? The euro slightly weaker, the pound slightly weaker, the Australian dollar slightly on a weaker side here. And that might tell us that the US dollar's strength might also give us further insights. Now, with the British data in our minds right now, what we see in the pound US dollar currency pair is that the market is trading well below this technical resistance. Any break of this level to the upside will obviously kind of lead to higher prices of the pound. And if the market is not able to move beyond that level, here we see then the market might weaken somehow further. The latter is what we at fxstrategies.asia currently expect. The downside momentum might be currently what's still ongoing. And what we see here in this remarkable charting pattern is that the market opened lower but trading higher on Monday. And what goes higher on Monday quite often leads to a fall on Tuesday, Wednesday, and Thursday, before then retracing back higher again on Friday. So we have the chance that the US dollar might stay sharp here in this market and might potentially actually weaken here. I mean, the pound might weaken against the greenback. We see the same in the Australian dollar. And by the way, obviously you guys know that the Australian dollar is the risk on currency, right? So if the Aussie rises, and also that's why this technical resistance pattern is super interesting and super important for us. If the Aussie rises beyond that level, we could see, and that's the zone here, we could see that the Aussie obviously strengthens further. That's no magical story from my side here, but that also equity markets will continue to rise. If the market fails to break above this zone, if the market fails basically to show any higher prices above this 71.80, 72, psychological level, the market might weaken further. And that brings us to the point that we could see maybe another fall in this market, and downside motivation in the Aussie US dollar currency pair could tell us that the risk sentiment will kind of weaken back to lower prices. Meaning to say, the equity markets might weaken further. By the way, the German DAX index has still been lagging behind the S&P, the Nasdaq, among other indices, because the DAX was not able to create a new high. Obviously, implications, especially energy prices. And I'm currently in Germany. I can see that how much higher they are compared to other areas in the world, compared to other regions, obviously cause a strong impact into the global economy. So the impact is pretty clear, and we should focus on this as well. And now, what's the gold market doing? Well, a stronger dollar could technically pull the gold prices back to lower levels, but that's currently not really the case. So we see that the demand in and of the shining metal remains pretty solid. After the market's correction recently, we now see that at these areas, the market seems to triple higher, I might say. Whether the market is going to rise again beyond this technical recent resistance might be the case, or might be the question rather. If the market stops rising at this area, we could have a few impacts doing or in for doing so. Stronger US dollar could be one implication. We could see yields rising, stronger US dollar as well, rising yields, and basically a continued higher level of the interest rate in the States might actually also start to pull this market back lower, and hence obviously causing some impact here in the recent price momentum. Talking silver, we see something extremely similar in this manner. We see that the market is just currently lagging behind slightly. We see that there might be some downside momentum here as well happening, and that's the implication we see on a global scale, right? So the market momentum looks interesting. It looks kind of quite solid, and I might not be keen in either buying or selling this market, but I would look for a medium-term impact. I would look for this current red candlestick as the retracement or bearish candlestick pattern, and any low is what we like to trade at FXstrategies.Asia here. Below the 74 US dollar is what we like to kind of like to sell with a sell stop level here. Down this price range. So downside momentum might indeed continue to occur, and this is why we are going to be prepared, because if we see negative headlines from the global scale, if the economy weakens further, and if petrol prices basically continue potentially to cause the impact, then we could see that simply the demand, economic demand, based on these high levels and high prices in silver might basically start to weaken, and that hence obviously the demand story could be the one pulling markets back towards lower price levels. News-wise, we've talked about most of the major events we see so far this week. Canadian CPI, we got other CPI data from the UK, we got the PMI data, as well as the other market driving factors. What about the crypto market? And we see that currently positive momentum can and was seen in the recent couple of, I'd say, several trading weeks. Let's check out Bitcoin, because the crypto market is kind of quite interesting. Whether we are now at this stage that the market is setting up for a potential rise or fall might be the question. Back then, the market was then falling, and now we see that the market has been still rising. And the question is, will we weaken again back to the lows or back to even lower areas? Or will the market not kind of do exactly as I painted this picture here right now and continue to strengthen further? Then next price levels in and for Bitcoin would be the high levels or higher levels here. We've just basically tested the recent lows of this swing momentum here, and we could see that indeed Bitcoin continues to support markets. One thing is for sure at the moment, the major or the most liquidity goes to Bitcoin. Ethereum as well is looking actually not overly bad. When looking at it from that perspective, we see Bitcoin rising, we see Ethereum also rising. However, XRP, among other of the major altcoin tokens, are not able to kind of rise alongside the Bitcoin market or Ethereum market. we see obviously that the altcoin season is not kind of anywhere, or we are not anywhere near the altcoin season. We need to see Bitcoin continuing their way or its way to the upside to then see that the major shift might come from Bitcoin towards other altcoin tokens medium term. Depends on the major risk sentiment. As said, currently my portfolio is still hedged. The dividend portfolio with the long positions only obviously hedged about 70% with short trades on the S&P 500. I expect still that markets will weaken eventually in the next couple of weeks, depending on how the geopolitical tensions will go. If even the inflationary story comes in, we got earnings season approaching. This week is also super important and super interesting. The big players, Procter & Gamble, General Electric, SAP from Germany, among other major players, are also reporting their data, and that gives stock markets, kind of quite some interesting times. Let me eye the charts, but I think we talked about most of the important stuff. We keep looking on the S&P 500 and the Nasdaq and their technical resistance areas. We keep looking on the and focused on the Euro US dollar, Pound US dollar, and Aussie US dollar technical levels, and will determine whether we can find some trading opportunities in these markets. Guys, leave your comments under the video, obviously, and don't forget to subscribe to our channel. We got some VIP interviews coming up in the next couple of trading days.